All attendees are in listen-only mode.
Okay, welcome everybody. My name is Peter Renton. I am the chairman and co-founder of Lend It FinTech, and it's my pleasure to welcome you all here this afternoon for what is going to be a fascinating session. We are here to talk about how banks and credit unions can rapidly launch new loan offerings that address specific customer needs. And this is obviously a very timely topic. And we have an esteemed group of panelists here, and I want to get things going. Maybe we can just do short introductions, and then we can get into the meat of things. So Chris, why don't you go head off?
Yeah, hi, thank you for hosting us. I'm Chris O'Connor, and I'm the CEO of Persistent Systems.
Okay, Brian? Brian, I think you might be on mute. We can't hear you.
Sorry about that. Hi, everybody. I'm Brian Lee, one of the senior directors here at Salesforce for our global financial services practice focused on community banks and credit unions. So great to be with you.
Okay, and Adam?
Hi there. Thanks for having me today. Adam Stepanovich. I'm the Vice President of Renewable Energy Finance at OakStar Bank, and I lead a division that finances consumer solar with the bank. Thank you.
Okay, so we've got a lot of questions here to cover, but if you do want to ask our panel a question, you can do so at any time. Just type in the question into your little question box, and feel free, and we will try and get to as many as we can. So let's get things started. Obviously, we're living in interesting times, in very different times, where things have changed rapidly for the financial industry, and certainly banks and credit unions are having to adjust to this new world. So maybe Chris, we could start with you. You've got a lot of clients here in this space. What are you seeing? How the banks and credit unions have adjusted in the last couple of months?
It's a great question. Obviously the banks and credit unions all dealt with a lot of what the rest of the world dealt with. And so the common symptom was you had to get home. And so, for example, in Persistent, we brought 11,000 people home in a week. We thoroughly tested our business continuity plans when we do that. So all the banks and credit unions, everybody else tested theirs in the process also, right? They brought everybody home. And in the process, that all the customers came home as well. And it put a whole new light then suddenly on the word digital. And digital could have been a part of your capability in the past. It could have been an adjunct capability. It could have been something that you offered or a way to get a process started. But what everybody suddenly found was, did I have a digital sidecar or a digital business fully prepared? And when I brought everybody home, did I take any impact off of that? And what you find when you go do that is you find out where the gaps are. Oh, this is where we actually had to be there, or this is where we actually did stuff in a way that required the physical presence. And so that has been rapidly papered over. So everybody's been working hard to be able to Band-Aid that up. And that then breeds the next discussion, which is, so if I can get back to competent and I can service my consumers and I can service my businesses, where do I go back to when I come out of this is part of the dialogue we see taking place as well right now, which is my Band-Aids need to be hardened up, and then my Band-Aids need to be expanded into the new business reality. And the thing that the whole crisis has done to us is it's pushed us digitally 3 steps forward. But when we come back, we're not going to take 3 steps back. We're going to take 1 step back, and maybe it's sideways to a new reality. And
Right.
I think that's part of what we're all defining right now. So that's how we see it, and that's what we're dealing with multiples of our clients right now.
Interesting. And then Brian, what about you? You've got also obviously many clients for Salesforce that some that have completely digital operations. But how have your clients fared during this time?
It's been interesting to see just the number of responses we've had. I think the first thing I'll probably open with is that it's amazing to see just the overall response that the banking and credit union industries have taken, to rally to this national emergency. I was honored with a set of executives just yesterday, and just story after story about how their teams are so committed to making things as as good as possible during this type of a time for their customers. People working around the clock, people working 7 days a week, just to try to get these loans processed and some of the responses that their customers need. So first off, I think the response by the industry has been incredible, and we've been really fortunate to team with a number of banks and credit unions across the country. In particular, I think we've got over 100 that I know of that have been working at their different responses to try to help people get funding during this critical time. So I think as well, just to echo what Chris said, many were grappling in the middle of all this with trying to figure out how you take your employee base, your associate base, and pivot them, number one, from trying to handle branch closures and how to get those employees safely to work from home, but then what to do with them, right? So we had huge spikes in contact center volumes and service requests, things like that. So they needed to actually bring some of that, branch resource to bear for some of those, that service triage. That's a lot to deal with at the same time that you're trying to, stand up facilities for even working from home. So again, a lot of hard work, quite a bit of chaos. And then I think if you layer on just the evolution of how some of the government programs were coming out during this time, the changes that were happening by the hour, by the night, by the day, that's a lot of change to absorb as well as respond to. But my hat's off to so many of our banks and credit unions who have really stepped up to the plate.
Yeah, for sure. And I think many banks are not used to moving so quickly, and certainly they have been forced to do so, in short order here. So Adam, I want to go to you. You're our lone banker in the session. So what's happened at OakStar Bank? Give us your perspective of how you have adapted to these changing environments. I can see by your background, looks like you're still working at home. So tell us a little bit about that.
Yeah, there's really a couple answers to that question. So my specific role and the position that I play at the bank really is the one answer. And I work specifically for a brand that is separately developed under OakStar Bank called Bright Oak. And we built that out as our renewable energy finance business. And that business is fully digital. And is leveraging a cloud-based origination platform that has really allowed me to make a sort of a seamless transition to home. In fact, going into this pandemic, I work from home 2 to 3 days a week anyhow, because of the business that we've built. And so it's been really sort of a neat, well, I hate to say that under the circumstances, of course, but within our scenario, it's been kind of neat to see that our business built underneath the umbrella of OakStar Bank really was able to make the transition very cleanly and in fact business as usual, more or less. Now there's a different answer for OakStar Bank, and OakStar is sort of your traditional, and because I focus so much on what I do, I can't speak at a very deep level, but of course, being a part of the organization, do have some insight. OakStar is a traditional community bank. We operate regionally in a couple of Missouri's largest metropolitan areas, commercial primarily based organization in terms of our asset base. And it was absolutely the wake-up call that I think most of the other community banks on this call are probably right in the middle of. Fortunately, we've navigated it pretty well. We've got an awesome team. I mean, it all comes down, I think, a lot of times to your team members and their ability to navigate change, ultimately, is what it comes down to. The systems, the infrastructure and everything, those pieces can always be better. I'm not going to say our infrastructure from an OakStar Bank perspective was perfect to transitioning to a home-based lending business. But if you have the right people in place to be able to navigate that change in a quick amount of time, I think that's where the key is. We did it pretty well. But I want to go to what Chris said, because I think that ultimately is the golden nugget here. he said that this sort of made us take 3 steps forward. Ultimately, the winners and losers in the next next round of this, or maybe not even the next round of this, but just in the 21st century ecosystem, the winners or losers are going to be chose based upon who doesn't take 3 steps back. So I think that's really the key.
Yeah, that's a very good point. And yeah, so let's talk. I mean, I feel like the ones that have taken 3 steps forward, I think, are the ones that have really embraced digital as the only channel. Because let's face it, when for a while there, I know banks are starting to open up in different parts of the country, but for a while there, pretty much every bank branch in the country was closed down, and digital suddenly became the only channel. So let's talk about that. So how are organizations navigating this, where they might have had a digital channel, but they've had all these other, they might have had a whole bunch of other different channels, and suddenly they've got to focus completely on digital. How have they been doing that? Anyone can jump in.
I'll start. One is I think as noted by Brian, the teaming around this has been fantastic to see with everybody. It's not just kind of inside of a single institution, but I've never seen the R&D community team so well. Also, we're tightly aligned in a lot of the work we do with Salesforce, and I just want to kind of echo that teaming's been absolutely fantastic. And I think that's part of what, to your question you asked, of what you can go do, which is there are a variety of ways you can approach this problem. And I'd do a slight amendment to what you said, which is you don't have to have been 100% digital to be prepared for this, but you have to have fully imagined your processes of having a complete digital sidecar if you haven't taken that step. So you might have a lot of traditional processes in place. The organizations that are doing best either were new ones that enabled full digital as the only channel, as Adam so accurately pointed out, but we've also seen people develop a single focused digital sidecar to their additional business, and they're able to hook in and they're able to make it run. The places that are having to kind of rethink and have suffering is a lot of people have done a little foray into this. They've got a mobile channel and they've enabled mobile devices. But when they did the digital channel of thinking about home internet, they did it differently, and the processes are slightly different and they gap. And when they went to small and medium businesses, they did it differently there, almost as if they were just trying to touch it. And we see a lot of people now saying, look, we got to get all these channels to consolidate, and we need to have a fully enabled digital sidecar that goes along with this. And I'm not going to disable my current business because that might be steeped in a lot of history or depth that you can't do. But the API economy exists today that you can parallel it with what I call digital sidecar, and be fully enabled to be able to have the duality in place. And that's the discussion we're having in a lot of places, which is, tell me how to get that digital sidecar to work. Tell me how to do the extensions. I implemented Salesforce this way. Now I want to implement it that way. Then I want to pull my mobile channel in to go along with it at the same time for a single experience. And I need to get it broken all the way. I need it to scale. A lot of these things were toys, right? You can take a picture of one check at a time. So you go over to a small, medium business, and you're like, they're like, great, I've got 500 checks to put in today, and I have 500 checks to put in tomorrow. And I got 500 checks to put in the day after that. And then I want to be able to see the cash and take a loan or take an advance or run my credit. And so these digital systems are now being stressed from the ancillary helper to being a full system when you think this through as well. And there's people that have done it. Adam's just a great example of what's done it. And what he's done is replicable as a sidecar or as a standalone in today's technology environment. And it's where we're talking to a lot of clients today.
Yeah, that's interesting. And then, as you were talking, Chris, I was struck by, in some ways, we're lucky. We're lucky this didn't happen 10 years ago, because 10 years ago, we would have had a very different capabilities, right? And even companies like Salesforce that have been around for a long time, probably 10 years ago would have struggled with, weren't as advanced as what they are today. So, I think that's something that we really need to. We should be thankful. Small things to be thankful for, but I guess so Adam, for you guys, you said that you set up this as a standalone digital business inside the bank. So what actually have you adjusted? I mean, I imagine that apart from the working from home and some of the internal processes, what have you adjusted when it comes to being, coming to your sort of standalone business?
Not much really. The separation. I guess I would say, just in order to strive for an answer, we did adjust the pace of change that we were continuing to implement. One thing that we learned probably the hard way going into this is you've got to be continually growing and evolving your platform. You can't just stop. Your customers are not going to allow you to just stop, nor frankly, once you get sort of that bug of the possibilities, you can't stop. And so I would say just that is the only thing that has really slowed, has been our continued development because of just the physical separation in human resources. Oh, we don't have you, Peter. Sorry.
I got to press my mute button. Okay. So Brian, do we still have you on?
When I think about your question, and Adam, feel free to join in. You're really sitting here and laying down a structure that you want to be able to think of from the cloud platform layer up through core banking, up into the core services you want to enable and how they want to be enabled. And then you got to think about the side you or the parallel forms you need in terms of APIs to be able to talk to all the legal institutions that are required to be able to give you the grants, the authorities, the powers to carry out the loan process or the core banking process that you're trying to engender. And that's a technology pattern. And so when I think about what Adam's done or other places where we've done this, for example, at EasyCorp or at a credit union in the UK called Gojuco, we literally helped them lay down a technology pattern that enabled this to be a highly scalable cloud-based platform that tied into core banking systems on one side, but on the other side, it tied into regulatory and compliance interfaces, which are also now available to go to your 10-year comment. And then you enable up that regulatory path to how you talk and work with either the businesses, the commercial side, or the consumer side that you're working with. And when I think about, I have some familiarity with what Adam's done. When I think about what Adam's done is he's accurately laid that pattern down. And that pattern by itself is, it's got a bunch of different cloud choices you can make. And when you lay that down, then you're continually making sure that you've got all the recovery, all the dynamics of it. It's got the scale, it's got the swappability, so that your systems can be upgraded and maneuvered along the way. And you're literally putting together, in some cases, maybe a dozen different software components to be able to make this platform be finally enabled for your consumer. And it might be more. It's probably more. But that's the type of work that's going on underneath this in terms of being able to do that. And when you think about making that digital sidecar, Adam just went straight at it and did it. Others then are kind of looking at it. And it's possible to create little cloud loops. And a lot of people think that they're digital when they do that, meaning they just take a part of their business and they loop out to the cloud for something and come back. When COVID hits, that means they're still got problems because they didn't do a stack. And that's what I think businesses are having to think through right now is, in some cases they're having the discussion of, well, we did that in the cloud, but you're missing all these other elements or components of how people interact, and now they're having to go back and rethink that from a process point of view.
Right. And so Brian, we have you back, right?
Yeah, sorry about that. Yeah,
that's okay. So maybe I want to switch to, maybe actually you can just tell us your experience in the last couple of months. Are people coming to you, your clients coming to you saying, I imagine there's a variety, but saying, oh my God, we need this particular piece implemented like tomorrow. And what? So how are you? I'm sort of trying to get into the nitty gritty of the conversation here. And how are you responding to that? And what do they need to do to really accelerate something that might have taken 3, 6, 9 months? How do they accelerate that time frame?
Yeah, no, it's probably the question of the quarter, right? In terms of what things have been about, just in the past 60 days in particular. What I think about here is, we probably had mindsets that, well, in the old days, might have taken a year to stand something up. In my experience here at Salesforce, it's measured in a few months. And what's been really accelerating in this crisis is I only have days to do this now, right? So, but it is interesting that the decision-making process on our banks and credit unions is also accelerated, right? If they have an immediate opportunity, if they have to rally, to that opportunity, that need for their customers, their decision-making process is accelerated. I think what Chris was leading us towards, and what Adam has been done, is thinking about the platforms that you need to be on in order to be able to respond in a whole different time frame than we've really thought about or thought was possible before. As you all know, we have an extensive set of ecosystem partners as well, both additional solution providers and lending companies like NCNO, companies like Cloud Lending and Q2, for example. And their offerings, for example, were to be able to stand up in 3 to 4 days this full forgiveness or intake solution, as well as the forgiveness parts of it, if you will. And they're built out on the platform. So again, to Chris's point, if you have a platform that you can operate with, that you can adapt, that you can move to respond to new requirements, you can do it in days and hours and weeks, as opposed to what we thought of, as being sort of the norm before. Yeah.
Right.
And to add into that really quickly, right, in terms of actual instance, some of the requests we're getting, right, just recently the government dumped $600 billion into the system, right, with all of the packages and the stimuli that they put into the system. So you think about, in a matter of 24, 48 hours, the federal government dumping $600 billion into the system, ACH transfers, right? And then you think about everybody getting that part, and then the immediate turnaround, the bubble that took place around that. Instead of it being a nice, smooth, level, transactional business day, suddenly the federal government dumps $600 billion into the system. Everybody's got to crunch that through. Everybody's got to then make that money available. People then need to access that money and decide what way and what line of credit they're going to take that on. And so then suddenly this bubble of processing power has overwhelmed some people. And so you think about, direct areas where the digital sidecar and the extensibility of it plays. Those people that we saw that were very prepared were able to expand to that bubble and contract, and others struggled with that. And that's the type of system that you see people coming to. And I think to Brian's point, saying, we need help with this in a matter of days, and we think the government may do it again. And we missed this time, but we got to be ready for the next time for this to happen and be on top of that opportunity.
I think the other point that I'll just make on top of that, Chris, is that, again, some of these volumes were things that I think community banks, and Adam, you can talk to this as well, but I think many of my community bank and credit union customers, they hadn't dealt with this volume in this short a period of time.
That's right.
So we've got, for example, banks, I'll think of one, Muskoma Bank, one of the mutual banks up in New Hampshire, very forward thinking now about how they're going to make a sort of a digital operation out of their bank. But the volumes that they had went from doing, 700 a year to, 1,200 in 2 weeks, basically, right? So just getting your organization aligned to, deal with that kind of a scale and that short a time frame is, again, I think a real wake-up call as to what the world is turning out to be. So.
Right, and I think that's a really good point, because like the Paycheck Protection Program that we're talking about here is, we had such little time, and I like you saw when it launched on April 3rd. I mean, I was watching along very closely. There was many of the largest banks couldn't they couldn't accept anything. Bank of America were on board pretty quickly, but many of them just didn't have the systems in place to start the process, and they got them involved. Most of them were able to get things in place over the weekend. I know some were slower than others, but what was the secret to moving so quickly? I feel like there was a huge range in time period for some banks jumping right on board, and others, I mean, assuming you were an SBA lender approved already, because if you weren't, that took a little bit of extra time, but assuming you were, what was the secret to being ready from pretty much day one?
Yeah, I mean, I think I want to add there, I think we're speaking as if there was a technology solution available to handle that before it even happened. And I don't think that that's the right way to scope that question, right? I don't really think that's the right way to look at it. Ultimately, there wasn't going to be a solution, especially for a community bank. Now, what's frustrating is some of the institutions that you're talking about have been spending hundreds of millions, maybe billions of dollars on software for years and years, and yet they weren't ready. And so how was a community bank supposed to be ready? So we processed at OakStar, and I don't have the final number necessarily, but we ended up processing over $100 million in PPP loans. And that doesn't sound like a big number to a lot of bankers on here, but that's 1/10 of our assets we did in, 4 weeks. I mean, it's an insane volume. And so how were we ready for that? We weren't ready from a technology standpoint, but we were ready from a mindset standpoint in regards to the fact that we were just going to get it done. Right. And now we have to look at the technology to allow the process to be smooth on the tail end. We learned a lot. I can't speak for myself, but obviously our organization, I know I've heard people say we learned a lot through cramming that volume of loans through our systems in a short period of time. There will hopefully be a lot of growth that comes from that. But there was no way to be ready, nor should anybody on this call feel bad for not being ready, because there was no way to be ready. It's just a matter of growing from it.
Right. Yeah, that makes sense. It's it really was a unique time period in banking history, really. And I think we should all. I mean, I look at it and think it's gone incredibly smoothly for the fact that there were obviously there were issues, and they've been talked about ad nauseum. But I think the fact that the money got into it did what it was supposed to do, and banks reacted quicker than they ever have, and saved, I think, hundreds of thousands of businesses that may have gone under without it.
So anyway, Adam, in your go-forward mentality, with that same analogy that you just used, is the notion of flexibility and digital flexibility now a part or a more active part of that thought process?
Well, I think OakStar, in terms of most community banks, we've got to really separate community banks from, some of the larger institutions, because the mindsets are very different. OakStar tries to make sure that we're looking forward, and I think we've been making progress on a digital front. I think this probably fast-tracked that. I think it probably sped the process up. It allowed us to recognize the vulnerabilities and the holes in real life faster than what they would have played out if we were just working this change out over the next couple of years. And so I really think that's where the value is it gave us the ability to really, in clear, high definition, identify where the holes existed.
Yeah, Adam, if I can build on that point, I think that is kind of what we've seen as well, where, if you had a digital transformation plan of some kind, it just got accelerated, right? We're seeing many of my customers talk about that topic now. And I think part of the reason is that, as you think about your bank leadership, your board even, right? If they're seeing the requirement for your bank to move fast and respond in an emergency, and these types of ways of working together to get it done, while also identifying, as you said, where there are manual holes, where there are just things that you can't brute force your way through it. And that if you applied these sidecars, as Chris is describing, or you just deployed some of these other technologies that could help smooth that process out and accelerate it, it brings it home to leadership, to your board, in ways that you couldn't have pitched this, in a presentation a year ago, right?
Right.
So I think that people are living it now, right? And we're all living changes to how life is going to be right now. But I think that many of the bank leadership, bank boards that I've spoken with, this has crystallized the view for why some of these types of things are important and why they need to embrace and invest in that for the coming.
Right. And so I want to just dig a little deeper and talk about underwriting, because we're talking here about loan offerings, and many banks and credit unions have they've had underwriting models and methods that have evolved over years and decades, and many of them are manual. They're not actually automated. So how do you look at that piece? And if you've been doing it in a sort of a manual way, what can you do to really make the first step into digital?
This is a ripe area we get a lot of requests in. The whole notion of how underwriting's done and how scoring's done and credit approval's done, as you said, could be manual, or it's just steeped in a degree of rigidity. It never has had to be this flexible before. So what we see people looking to do is to be able to have access to, I'll call it, the data elements, and be able to dynamically adjust them, or to be able to offer competing models so that they can feel their way through this. COVID has really presented, what's a good and bad credit score for somebody that had a business a month ago and is struggling to keep that business or reopen that business today. 2 years ago, that might have been one credit score. In today's environment, that score that would have been done 2 years ago has no applicability. And so having tools to be able to provide alternative models, alternative model investigation, bordering on AI type of capabilities, being able to look for those patterns among different types of businesses, whether it's by segment or by geography, becomes important. And then there's the human factor, I think, that comes into this also, of being the final judge on risk, but to be able to see the landscape and offer the patterns has been a challenge in some places where that's been traditionally done. And we see people now trying to use modern technologies, data mining, AI oriented analytics to be able to get insights that they didn't have before. And we do get that request. We get, come help us, see our clients in a new light, and be able to enter new variables. And COVID-19 certainly is a huge variable on what was, credit scores. Just a simple example. What was a good credit score a year ago? It's completely different now.
Yeah. I'll add to that, if I can, Chris, that I think we've seen some interesting new applications being spun up by customers on our platform. Bank Leumi here in New York, was an interesting one where they built a credit risk assessment application on Salesforce. And the idea was to really bring the credit risk community and the bankers together, right, to really assess in their portfolio, where are the hot spots right now, right? How do we do a financial health assessment on some of our customers, right, to really assess where they are at this point in time? And then how do we look through our portfolio so we understand what that exposure looks like and who needs to be reached out to and how we can work with them to really start to mitigate some of the impacts, that their businesses are feeling right now, right? So I think you're spot on. The idea of really trying to get some visibility into the data around not only your loan portfolio, but what are the characteristics of that business or that consumer? And what do we need to do to help them restructure, to recover, and to get it back on a path where they're healthy again as this thing starts to calm down and we can think about getting back to some level of normalcy. But this is a critical time where both the bank has to assess what have we got on our balance sheet, and then they have to look at their customers and then prioritize, like, which customers do I have to make sure I get to this week in order to be able to understand what their situation looks like and how we can be of
Right.
help.
Right. And Adam, I want to get to you in just a sec on that. Before I do, just a reminder, we're going to start audience questions here in a little bit. So if you have a question for our esteemed panel, just type it in now. So Adam, just, as the lender here, just taking on what both Chris and Brian said, that, how are you adjusting underwriting? Because, you like for your business, you're relying on accurate credit data, which is pretty hard to come by these days.
Yeah, to be honest, we haven't seen those adjustments just yet. I mean, we're all still kind of in the middle of this. I think Chris really, he kind of gave me a head turner there, because I hadn't thought about that. So to give you an idea, our credit profile is pretty fixed. I mean, on the consumer side of things, and that's especially important to draw a distinction to, for our listeners here, is you've obviously got a commercial credit profile, which I'm a little less familiar with, but is far more of a manual process and just comes down to being, from a technology perspective, access to the data, ability to manipulate it and underwrite it within a platform is important. But I'm more on the consumer side, which tends to be a bit more rigid. And so Chris really made me think about the fact that we're going to have to probably get creative, 6 months from now, a year from now. Credit tends to usually be, from FICO score perspective, it tends to usually be 90, 120, maybe 180 days behind. But I think that's a really interesting comment. I think that we're really going to have to think hard about how that might adjust 6 months from now. Because right now we draw pretty clear boxes. We allow our algorithms to underwrite folks, and we might take a second look every once in a while. But to see how that plays out over the next 6 months could get interesting.
Yeah, that and it brings up the point that you just made me think of that there's, when you're doing automated underwriting, it all relies on data, and data is only as good as what you bring in. And there are offerings. I mean, I know several companies personally that using real-time data, like whether it's cash flow data, you can actually tell if you can pull in the bank account data of a consumer, you can tell, oh look, looks like they lost their job 2 weeks ago. Maybe we shouldn't. Maybe not just we shouldn't lend to them. Maybe it's their risk profile is different, because one of the things that's good thing about the stimulus is that even those consumers that are losing their jobs are actually staying quite solvent because of the payments that are coming to them. But anyway, I want to go back and just. I'm curious about the 3 steps forward that you put there, Chris. And so, what is it going to take? What do you think the differences are going to be between those companies, those financial institutions that don't take a step back, that actually take 3 steps forward and even get ready to take a 4th step rather than going backwards at all? What's going to differentiate those from the companies that maybe let's get back to as much normalcy as we can and take 2 steps back?
We were big proponents of the whole digital evolution taking place pre-COVID, and it's why we worked with vendors such as Salesforce to be able to have a platform to then be able to do extensions off of, and it's why we partnered with people like nCino and like Mambu and some of the others that are around this whole ecosystem of digital capabilities that drove us. And what we saw, and in many of the places where we were working pre-COVID, wealth management firms opening up with no brick and mortar presence, right? We saw neobanks or bank wannabes, right? Businesses that were close to people with money or close to money capabilities, now extending themselves out to be a credit union, to be a bank, or to be a lender, or to be a wallet. In some cases, everything from pawn shops to retail stores to big box stores, all looking at this saying, I'm going to digitally move over with a fraction of the cost and a fraction of the discussion I had a discussion the other day with the local credit union's CIO, and he says to me, Chris, we're not going back. Meaning we may keep some of these buildings, but we're not going to open a bunch of these back up for people to ever go to again. And we're going to remove that cost and we're going to remove that overhead. Likewise, some of these new businesses we're looking at, they already had forgone the cost of commercial real estate. And you're going to see a bunch of institutions that are going to start to gain that benefit with the ones that say 3 steps and forward as well, in terms of how they think about IT, traditional IT structures and all the processes that they support and engender, and where those people are located at the same point in time. So there's a lot of hidden costs for those that stay 3 steps forward and move forward and where they get to continue to go. And then there's, I'll call it the process flexibility part of this. We've talked about a lot of process flexibility today so far, whether that's at the platform level or the sidecar level, or whether that's having 100% digital or just a fully operating digital stack. And then we just had this fascinating discussion about how do you deal with waves of cash that may come in and hit the system, as well as how do you deal with dynamic credit scoring and adjusting populations. Those people that stay 3 steps forward and go forward are going to be a whole lot faster on not only client satisfaction, but more importantly, they're going to be a whole lot faster on the dollar, on the ability to get to the business of banking versus dealing with the reality of change. And I think that that's going to be the big thing that I must see people benefit from. We're studying hard the institutions like Adams, like this wealth management company I mentioned, like some of the others that are having us create digital sidecars for them because they're not in banking but want to be in banking. And we're like, this is the model. This is the model we got to, that everybody's going to move to. And the reason is for faster service, new services, better responsiveness, and then just on the back end of it, it's going to be a whole lot cheaper in terms of cost as you make that switch. So those are my thoughts.
Mm-hmm.
Mm-hmm. I want to add on top of that. I mean, I think from a truly bank perspective, I tend to think in paradigms sometimes. I think a lot of times when people talk about these transformations, they are so strategic and they are really thinking about the fact of the logistics of moving data from one system to another, of all of the complexity associated with that. Chris's people probably do a great job at this. They open up the paradigm needed to make those shifts, because until a banker specifically gets over that hurdle, they're not going to change. I came into a bank just 2.5 years ago, not ever having worked in banking before. And so I really have had to navigate that from the perspective of every conversation I have, I'm trying to lay the foundation first of why it's important so that they understand why I need to do it that way. And until I get them across that first mental hurdle, you're not going to change. And so I think that's really the most important thing is to make sure that the 3 steps forward are not just tactical, but are also in your paradigm of how banking needs to be done.
Mm-hmm.
I'll pile on you really quickly here, and I'm gonna try to be a little provocative. I am not a steep credit union or banking person by all of my training. I've been in and out of the realm from a technology point of view. When I came into Persistent and I started looking at, so we're laying out a whole wealth management company. Okay, got it. We're laying out a whole digital lending process over here. Okay, got it. We're laying out a whole credit union and a wallet over here for somebody else. We've put it all on a managed services, and we're letting that credit union sell it to other people as a pay by the drip oriented capability in certain geographies. And then I ran into some people that have been in the market for 30 years and there's this huge paradigm shift. On one hand, the technology exists today for this to be like Airbnb and Uber. The Airbnb and Uberization of this market from a technology point of view is right here. It's in front of us. The capabilities exist. in the cloud vendors, in the vendors like Salesforce that bring us all the dynamics of their platform capabilities, and in the subspecialty vendors that are on top. And if you lay out the solution pattern, you can stand up a working credit union in a matter of less than a quarter, right? And have somebody being able to start working on it. I'm like, this is it. This is the paradigm shift. It's hit this industry. It's ready to go like Airbnb. It's ready to go like Uber. But I think to Adam's point, when I work in the industry a little bit and as I roam around, I find the readiness to make that shift is there in some people, and often in the people that are attacking the industry, like the people I mentioned, like the pawn stores and the big box stores and the retail stores that just are like, what's the big deal? We're going to stand this up and do it. And the regulatory compliance is possible to do at this level today. And then I run into the other folks that it just seems that we're stuck. And I think that's a great thing that you kicked me on, Adam, which is I'd forgotten the analogy until you brought it up. But I often describe to my own people, there's no reason why we can't be a catalyst, all of us on this phone call, in the Airbnb or Uberization of this industry with the capabilities that are there today.
Yeah, we had a session earlier today, actually, where someone made the comment that it's not a technology problem anymore. It's about policies. It's about what you do internally, what you decide internally. The technology is here today. And speaking of that, I want to get to some of the audience questions. There's been a couple of people that have picked up on what we talked about with cash flow data for talking about underwriting. So lenders some lenders are starting to use this. Wanted to hear the pros and cons of using this sort of cash flow data and what tools have it available. Does anyone want to comment on that?
I'll take a first crack at it. I'm sure Adam's got some better ideas, but I think some of the uses I've seen for cash flow, I think the opportunity is that it helps you be a bit more anticipatory of what a business or a consumer may be going through, for example. So, for example, if you were in the past waiting for them to come to you for a credit line extension or some sort of a refinance of something, if you're watching a cash flow pattern happen and you see, dips in it or whatever, spikes even, you now have context and a reason to call and reach out and say, let's talk about what's happening for you. Is there a solution we need to rewrite or redevelop or launch for you, that could adjust it? And what a change in mindset for your customer you cause by being proactive about something that you see happening, for them, for example. So I think that those types of data can be helpful for just shifting the dynamic of how you interact with your client, what you think about, how you anticipate, some of the context of their situation maybe evolving, for example.
Okay.
Yeah, and in terms of cash, from a cash flow perspective, cash flow in a consumer lending business is pretty straightforward, and it either cash flows or it doesn't. I'm probably not the best person to comment too much on a commercial front regarding the importance of those cash flows, but I do know what little bit I will add is, and I'll steal this from a colleague of mine who's a commercial lender, and I chat with them a lot about technology. The ability to model those cash flows and look at those cash flows within a business, or what most people on this call will know as a global, the ability to use technology to really impact those reviews is really valuable for a community banker, especially. I'm sort of ashamed to admit the organization that I work within, even as recently as a couple years ago, was doing those on paper and Excel. So moving that forward was really valuable. But yeah, don't have a lot more to add to that.
Okay, so another question that's come in here is about, this is interesting, about sort of onboarding new clients in a virtual world. You obviously don't have a face-to-face ability to connect. So how are you thinking about expedited, new ways to onboard new clients, by adding sort of, they gave the example here, adding frictionless virtual tools such as voice biometrics, activating voice banking, that sort of thing. So how are you, and that was actually, the person was asking you directly, Adam, but I'm happy to open it up to the whole panel.
Yeah,
Adam,
I'll
I think
touch on
this is yours.
this. Oh, sorry, go ahead, Chris.
No, I think this is yours.
Well, this is kind of an interesting answer, and to be honest, the asker may not probably get the answer that they necessarily are looking for. But this opens, I think, a good from my personal experience. I think this opens a good window to make a point, and that point is these changes within most banks. Now, I can't speak universally here, but I think these changes within most banks have to come in a stepwise function. Most banks are not going to just completely rip the Band-Aid off and go fully digital, whether it's a sidecar, especially not the whole bank, for sure, but even in a sidecar, they're not going to do that overnight. And so I was faced with this resistance. It's one of the first questions from a compliance perspective that I probably had a deep conversation on, was that disconnectedness. The important thing for us is we implemented some human touch here, albeit a little bit more efficient than getting out and seeing them. But we collect documentation from that customer in electronic cloud-based fashion that we can review from my home office. And so I think it's important that we remember that you don't have to go from 0 to 100. You don't have to upend existing processes that completely eliminate people, but you can do them in a better, smarter way. You can use tools like this, Skype, Zoom, whatever the case may be, if you need to get in front of your customer. So I think that's the point I would try to make there, is it's important. You don't have to completely eliminate the human function, but do it in an efficient way.
I think there's an interesting point to add there, which is this notion of a digital front door is really up to you to figure out some of the design points. And a digital front door doesn't mean that it's completely machine talking to person. It can have all kinds of attributes. We do digital front doors in credit union banking industry. We do digital front doors in healthcare as well. And the idea that you can get interactive with a digital presence of video is a well-known technique that you can embrace and you can enjoy. It can even be a differentiator if used in the correct way with the right brevity. People actually feel more secure out of that to some degree than not. And so I really support what Adam just said, and I think the whole idea that digital is an extension, it's not a computer replacement, I think it's a good point to get across.
Okay, yes, indeed. So we've got lots more questions coming in here. We're not going to be able to get to all of them, but maybe here's an interesting one that I personally find interesting, because there's been a lot of movement in the lending space. There's obviously been a lot of movement with the alternative online lenders. They've, some of them are particularly in the small business space, so really have been dominating in certain segments. But the sort of question is sort of where does the alternative lenders are now struggling? There's been a lot of talk about them. So does this, do you think that from a traditional lender perspective, how can they take advantage of this? Are the alternative lenders still a threat in many ways, or how are you viewing? I guess the question is, how is this an opportunity, or is it a threat now that in this new world with looking at the state of alternative lending?
I'll take a swing first, I guess, at that one. And again, this will be a little bit more opinion than something that I've probably backed up with facts and the like. But I think there's a tremendous opportunity for extended partnership actually during this time. As Adam was talking about, just assessing or designing what you want that experience to be about, what you're going to design it, what criteria you're going to design it for. I think the alternative lenders, the fintechs, have shown us for a decade now that speed, transparency, tactic or values like that in the process are critically important. So to me, if you're a community bank or credit union, you need to assess what your digital offering looks like right now, right? Can you deliver it that way on your own? Do you need to partner with someone else? And to me, it's perhaps an opportunity to look not at so much at the fintechs as the competitors, but I'm hearing, at least with even a group of COOs, CEOs I talked to yesterday, they said, you know, we've proven to ourselves during this crisis that there were many firms, businesses that were not our customers coming into the pandemic. They were customers of the big banks, but because they couldn't get help by the big banks, they are now customers of ours. So we'd like to capitalize on that and grow, you know, that opportunity. So even though some of the big banks have a lot of dollars to spend on this, if you can create that level of speed, transparency, and adaptiveness to the marketplace, I think you've got opportunity, you know, to win going forward. And I don't know that you can build your way to that, right? And I think that's why working with partners like Chris, like hopefully like us, if you're thinking about building platforms that you can rapidly scale and adapt and add new things to and change, I think you've got a much more level playing field that you can compete with. And I think that the fintechs, the outlenders can actually be allies in some of that process would be my view.
So my opinion, to build on Brian's point, we're only a certain percentage through everything that we're going to deal with right now. Not even close to 100%. Right? You know, the tail here. You know, it's like we went out and we had a couple drinks. We're going to pay. This hangover is going to pay for many days to come. And so for, you know, a couple hours, the hangover is huge. So you got to think of it that way. And so in this first triage, you're going to see a tier of alternative providers drop out. You got to remember, the economy just went from 2-point-something% employment, Dow at 29,000, going to 35, to, you know, 180 degrees the opposite way around, 14% unemployment, Dow at 22,000, right? And it's someplace in the middle right now, but you get the point, right? So in that, there's going to be people that were in this hyper growth economy that we were in that are going to fall out, and you're going to see that, and there's going to be articles written on them, and that's going to happen. It's the culling process of life, right? That we've seen in the business cycle hundreds of times, right? But there'll be some survivors, and then there'll be people that watch the first fallout that will jump in as we go through this next wave, and they're going to jump in a different way than the traditionals have done it, and that's going to be what's interesting to watch where to come. The survivors are going to have antibodies to this economic devastation that just happened, and they're going to have learned, and their key tools and things that they use are going to help them get them through it. And the new guys that jump in are likewise going to jump in, capitalizing on the opportunity.
Oh, I think we lost you, Chris. Sorry about that. So your audio just cut out. But I think we get what your point being made. And I think just one thing to add to that, we're actually out of time now. But I feel like you bring up a great point, and you know, there are going to be a lot of innovation happening. There's going to be a lot of, you know, banks and credit unions that are going to be doing new things. There's going to be, I feel like, new entrepreneurs starting new companies, new lending companies, new fintech companies, and there'll be new banks that will be born out of this. And I think it's going to be a very exciting time once we get through all the pain. And you know, I feel like it's, you know, I really appreciate all of the perspectives here, because I think you've painted a realistic view that, and it wasn't pessimistic. It feels like to me that you've really created there is opportunity here that simply wasn't here 3 or 4 months ago. So anyway, gentlemen, Adam, Chris, Brian, really appreciate your time today. It was a fascinating discussion. Thank you very much.
Thanks, Peter.
And also a big thanks for Persistent Systems for putting all this together. Okay, thank you.